Hi there, welcome to Kneppy Invest, and welcome to three stocks or companies that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 5th of August 2025, intending to release it sometime in September or possibly early October, but more than likely this video will be released in late September. Okay, so three companies I'll be focusing on in today's video include Change Financial, ticker code CCA, Urbanise, ticker code UBN, and then Somnomed, ticker code SOM. All three companies are operating cash flow positive, and that is the main reason I've included these companies in this particular series. So we'll have a brief look at what these companies do. Then we'll focus on the Appendix 4C, and then we'll have a look at the cash receipts history before finishing off with looking at the chart for each of these three companies. So let's start off with looking at Change Financial Group. Now, Change Financial Group did release a trading update about 2 weeks before they released their Appendix 4C, and it was a quite positive update from the company. And that is actually when I first really started to pay attention to this company. So that is actually the first time, only 2 weeks ago. So this company is, I suppose, a fintech company to do something to do with payments. I can't actually tell you what they do, but on their homepage or webpage, they do mention that they are redefining payments and card issuing. Now, if you have a look at their solution page, they have two solutions, Vertexon and PaySim. So Vertexon is payments as a service solution delivering physical and digital card issuing, transaction processing, and more. And PaySim is a modular end-to-end payments testing and certification solution. And they also have is that Visa or MasterCard? I can't remember. Anyway, that's our symbol there. Anyway, so have a look at that company if you do like the fintech sector. Okay, first thing I'm going to just mention is Change Financial has a market cap of about $60 million. And it's also illiquidly traded. I just had a look before I started recording, and I noticed there's only been one trade today, and that trade was 2 shares worth 17 cents. Yes, I don't know what happened there, but that happens quite often with these small companies. Just a few shares traded at a time sometimes. And if you have a look at the trade history, you might go back and see there are some days. Yeah, there's one day. 4th of July, there was only 2 shares traded that day. Some other days, only 1 or 2 trades. And probably there are also some days where there's no trading at all. But when they did release that trading update on the 10th of July, share price went up 24.3% on 4.5 million shares traded. Share price went to a high of 8.7 cents. Share price hasn't moved since then. So this is interesting. So I think this company, particularly when we focus on the chart, it's prime for a breakout. It's prime for a breakout. I just like to see a little bit higher volume coming in. Okay, back to their Appendix 4C for the June quarter. And of course, the first thing I always do is have a look at the company's Appendix 4C, focusing on Section 1, and to see whether or not the company is operating cash flow positive for the quarter. And Change Financial was operating cash flow positive, $932,000 on receipts of $4.3 million. They're also operating cash flow positive for the year, but it seems like, based off the year operating cash flow and the quarter, that the rest of the year those quarters were not quite as good as this one. So it sort of makes sense that this may be the first time I've actually taken notice to this company, because they haven't really hit the financial performance out the ballpark. Receipts to customers for the 12 months, $15.3 million. Next thing I like to look at is whether or not the company is free cash flow positive. Now, the technical definition of free cash flow is operating cash flow minus capital expenditure. And if you use that technical definition, the company is free cash flow positive for the quarter and for the year. But I personally like to include intellectual property or any sort of capitalized research and development. And if you do that, they were free cash flow positive for the quarter, but not for the year, because they spent $1.5 million in intellectual property for the year. So that's something also to keep in mind on, because this is something companies spend each quarter. It's not a one-off. It's a continuing spending. So it's not an accounting standard or whatever, but something I do like to track. Slight difference I do make when it comes to my free cash flow calculations. Nothing really when it comes to financing activities, apart from capital raising during the year, $3.1 million. And the other thing I like to look at is whether or not the company has any debt. And Change Financial does not. Also, I like to have a look at highlights just to see if there's anything else here. There wasn't anything in the highlights section that really stood out to me. They just talked about being or having underlying EBITDA or being underlying EBITDA positive. Revenue growth up 42% on financial year 24 and guidance of in excess of 30%. Positive net cash flow from operating activities, which we already know, that sort of thing. And the last bullet point is positive financial year 26 guidance release on 10th of July 2025. I won't touch upon that in this particular video, but it does look like this growth is going to continue into financial year 26, and they should see expansion in EBITDA and cash flow, more than likely. So pretty nice update from Change Financial. So let's have a look at the cash receipts history for this company. Is this just a one-off, or is this company just growing? And I love to look at these sort of things. So this is cash receipts history for Change Financial since they listed on the ASX back in late 2020, and we see a trend here, an undoubted trend. Actually, I'm not sure if they did list in late 2020 because I have a feeling I actually eliminated some of these quarters because they were so low and nothing happened. So something happened in late 2020 when it comes to Change Financial. I'm not sure if they made an acquisition or maybe there was a backdoor listing or what, because I'm pretty sure if we have a look, yeah, I should completely eliminate. I've completely deleted some numbers. Anyway, it doesn't matter for this project anyway. So anyway, cash receipts have been increasing since I really started following Change Financial's cash receipts, growing from 1.1 per quarter to $4.3 million in a quarter. So they've quadrupled on a quarterly basis. And you can actually see receipts growing really nicely over the last 6 or 7 quarters. So in fact, the company has seen 3 successive record cash receipts quarter. So definitely things are moving in the right direction, and seems like based off their update, their trading update, more than likely company will experience more record quarters in financial year 26. Okay, so let's have a look at the chart for this company. This is the chart. So yeah, the share price did break out when they released that trading update on the 10th of July. Share price up 24.29%. Share price has sort of gone sideways since then. I do like this chart. The one thing I'd like to see is a little bit more volume coming in. So there was that nice pop in volume when they released that positive trading update, but I'd like to see some more volume coming in. And that would be a good indication that maybe some small fund managers or small cap fund managers are starting to pay attention to this company. If you have a look at the weekly chart, something else I like to look at, different time frames. Share price has been going sideways for a while. In fact, we'll say 3 years. Definitely a bit of a downtrend before that. Ooh, share price collapsed in 2018. Don't know what happened there. Anyway, and even on the weekly chart, potential for a breakout. I'll just say that. So the share price is at a resistance zone because the share price did get to this level back in August 2024, about a year ago. You can see share price looks like it was breaking out, then pulled back. This could be more sustainable, and I do like that the share price has just gone sideways the last 4 weeks after that positive trading update. And even if you have a look at the volume, there's been a subtle increase in volume since this time last year. Before that, very low volume. When the downtrend had come to an end, very low volume. So the selling had come to an end, but there wasn't any buying either. And then finally, we saw a little bit of an increase in volume this time last year, and maybe we started to see an increase in volume now. So interesting company at the inflection point, and the chart also looks sort of interesting. Change Financial, ticker code CCA. Now on to Urbanise. I remember first having a look at this company maybe 7 or 8 years ago, and the market cap of Urbanise must have been like $400 million. And I would call this company something to do with the management of apartment buildings. Something to do with that. And you can see that on their website, strata and facility management software, sort of along those lines of management of apartment buildings. Have quite 2 products, Urbanise Strata and Urbanise FM. So I suppose this is another software company. I'm wondering if they call anything as a service. Maybe strata management as a service, SMSAAS. Who knows? Anyway, this is not the sort of product I would ever use because I have nothing to do with apartment buildings. I could request a demo, maybe. Levies and arrears automation, admin automation, dashboards and reports, task management, meeting management, strata votes. So if you're in an apartment building, maybe the management of your apartment building uses Urbanise. Okay, now the market cap of this company, I have no idea. I'm going to take a wild guess. It's 80 million. 67.63, actually not that far off. $67.63 million. So much lower market cap than when I first looked at this company many, many years ago. But let's have a look at their Appendix 4C. And this was really intriguing. Really intriguing, interesting Appendix 4C from Urbanise. They released it on, which day? The 30th of July? The 29th of July. You can probably see it's illiquidity traded as well. This is another one. No trades today. First buy is at 73 cents. The first seller is 84. So big difference between the first buyers and sellers. You can definitely see why there's no action going on. So definitely illiquidity traded. And if we have a look at the trade history, when they released, in fact, there was no trading between the 16th and 29th of July. And when they did release their Appendix 4C, there was a little bit of trading, not a lot. So that's probably a major issue when it comes to Urbanise, just lack of trading. So definitely one company, probably the only reason you might hold this company is if you're very confident on their future. Definitely not a trading stock because of the lack of liquidity. But their Appendix 4C did draw me in. So let's have a look at it. And why did it draw me in? Well, it's pretty simple. Why? Because as you already know, the first thing I look at is whether or not a company is operating cash flow positive. And well, this one blew their quarter performance out the ballpark. Operating cash flow positive, $4 million. Yes, $4 million. Now, that was helped by government grants and tax incentives, but that was only 469. So if you take that away, still operating cash flow positive, $3.5 million on receipts of $7.3 million, which is telling me some pretty nice margins as well. For the year, almost $19 million receipts and operating cash flow positive, $5.4 million. So by far, the best quarter for this company was the last quarter. So maybe there is some seasonality. I don't know. If we have a look at investing and financing activities, they did receive or get $8.8 million in capital raising, which seems like a fairly big capital raising. And the company has a fair bit of cash on hand, $15.9 million of cash on hand, which means enterprise value is around $50 million if they don't have any debt, and they don't. So enterprise value of this company is around $50 million, which is interesting for a company that has or produced, what was it, $4 million in operating cash flow. It's interesting. But this could be a one-off. This could be one-off. This is sort of a situation where I want to see some follow-through from the company. And also, if you have a look at the commentary, they did provide average monthly cash use generated, and there was a bit of a blip in this quarter. So, in fact, they put a trend line there. I'm not sure if they could put a trend line there, but the last 4 quarters have been, looks like, operating cash flow positive for this company. The last 3 fairly slightly, but very interesting. Anyway, highlights, a lot of words in there. I'm not going to go through this. Let's just have a look if there's anything I really want to talk about. Nothing. No. The CEO says the June quarter marked the culmination of a transformative year for Urbanise. We delivered a 4th consecutive quarter of positive operating cash flow and achieved a 4-year target of cash flow break even, a milestone that reflects our disciplined operating model, improved collections performance, and continued progress in securing recurring high-quality software contracts across our core platforms. Oh, they also have a NAB partnership. There you go. A NAB partnership. So a fair bit of commentary here. Strata license fees, partnership license fees, FM license fees. I don't know how that's different from AM, but it might be. They're talking about Middle East here. So this could be more of a global company than I'm thinking. So $743,000 in revenue from Strata to FM contracts in the Middle East. There you go. Okay, so I might have a closer look at this in the next few weeks or so. Anyway, so let's have a look at the cash receipts history for Urbanise. Now, this company hadn't always been releasing Appendix 4Cs. Then the ASX said to them, you have to start releasing Urbanise. So I think they've only released, how much? Get rid of view, there we go. So this goes back to 2019. And if we have a look at this, in fact, I'm just going to make it a little bit smaller so it fits on the screen. So if you have a look at Urbanise's cash receipts history, there is this general uptrend in cash receipts. And then all of a sudden, in the June quarter, massive spike. Is that a one-off? Did the company make an acquisition? Or is this just the company performing really well? And maybe this is that inflection point for this company. So this is a sort of situation where I might just want to wait. Be patient just to see if this was one-off. But even if you take away this particular quarter, receipts have been growing, albeit slowly, over the past 6 or so years. Okay, so let's have a look at chart for Urbanise. It liquidly traded. That's probably the main thing. So I wouldn't expect this chart to be looking amazing. We'll have a look at the... Ooh, there you go. This is the weekly chart. By the way, yeah, the share price was significantly higher. Yeah, 2015. For some reason, I thought it was not that long ago. 10 years ago. Share price was $23. They must have done a consolidation. But I still remember this company having a massive market cap back then, and I just didn't understand why. And then, of course, you can see what happens when a lot of hype is in a company, and that hype just fades away. Anyway, if you have a look at the weekly chart, this is a really interesting weekly chart. Share price has broken out over the past 4 or 5 months, and a really nice weekly chart. We also have seen a bit of a spike in volume. It's not a sustained spike in volume, but if we have a look at the daily chart, this probably will look okay. Yeah, I don't mind this chart. Probably just a lack of liquidity. And that is, and when a company has liquidity issues, you sometimes can see a little bit of volatility. And we definitely saw that in May this year. Share price actually went from 89 cents down to 68 cents on a probably not much trading. Anyway, so interesting chart for Urbanise, but not there just yet. But the chart is actually looking interesting. Another thing is, I've done this in the past where I bought a company who was illiquidly traded, maybe not as much as Urbanise. And as a company grows and as they become more aware, or the financing or investing community becomes more aware of the company, in particular fund managers, you see liquidity improve significantly. In fact, I think the best case of that is, one of the best cases of this happening right now is Supply Network. If you go back maybe 7 or 8 years ago, really liquidly traded, and now it's much better. In fact, some people still say, some experts still say Supply Network is a liquidly traded, and I have to disagree with them. For instance, I'll just show you right now, Supply Network. So that is actually one of the benefits of getting the company really early. You can see that liquidity improve. And usually with that improvement in liquidity, the share price goes bananas. Anyway, so this is a chart of Supply Network, the daily chart right now. But if you go back in time, many, many years ago, yeah, here, if you go back here, this is back in 2017, not that long ago, it was illiquidly traded, but the share price started to go up. So the share price really broke out back in 2017, 2017 for Supply Network, when the share price was $2, now it's $36.90, and there was liquidity issues back then, yes, for Supply Network. But that is one reason why us as retail investors, even 2021, there was liquidity issues with Supply Network. So it's really been the last few years where liquidity has improved. That's one of the reasons is this company, I would actually define Supply Network as a high quality company, and that's one of the reasons. Anyway, this video is not about Supply Network. Okay, that's all I have for Urbanise. Now on to Somnomed. Sleep apnea. Sleep apnea, let's say, effective CPAP alternative products, Somnodent, Somnodent oral devices, that sort of thing. What else do they have here? Morning repositioner, Somnobrux, Somtabs. There you go. I have been following this company for a long, long time. At one point, quite a few years ago, they decided to expand into the United States in terms of sleeping centers or something like that. That failed, and then they got out of that. This company has, when you have a look at the cash receipts history, has the profile I'm looking for, but I'm going to do something a little bit different when it comes to Somnomed. I'm actually going to go to Fiscal AI and look at the growth, not only in revenue, but also their spending. And you'll see what I'm talking about when it comes to this company. Okay, so Somnomed, sleep apnea, there's a few companies on the ASX in this space. And I suppose Somnomed would be the smallest by far of those particular companies. Anyway, apparently you can click on either if you're a medical professional or dental professional. So that's not me at all. Anyway, let's have a look at Somnomed's Appendix 4C for the June quarter. And I'll be pretty honest with you, I've probably could, if I did this series every single quarter, Somnomed probably would be featured every single quarter. Anyway, so let's have a look at the cash flow report. They did separate their Appendix 4C or their quarterly report into 2 sections, which is exactly like what I like to see. So let's have a look at their Appendix 4C. Receipts to customers, 29.3 million. So this is, based off receipts, a pretty big company. But they do spend a fair bit of money on product manufacturing, operating costs, and also staff. 10.9 million on staff and 10.6 million on product manufacturing and operating costs, 4.4 million on admin. So they were operating cash flow positive by a small amount. Now, for the year, $108 million of receipts. So this company is, generating a lot of revenue, but only operating cash flow positive by 4.9 million. And again, staff costs, the biggest cost by staff costs 42.6 million. So that's one thing I'd like to see them try to decrease a little bit, but they are operating cash flow positive. However, in saying that, if you look at the capital expenditure, barely free cash flow positive for the quarter by about $100,000. $2.4 million operating cash or free cash flow positive for the year. They also spent a fair bit of money on intellectual property. So if you actually do include that, they were not free cash flow positive for the quarter and barely free cash flow positive for the year. So those sort of costs are actually real. So I do prefer free cash flow over operating cash flow. Anyway, debt, do they have much? Actually, what about cash? How much cash do they have? Enough debt, enough cash, 17.3 million. Why did cash fall? Of course, yeah, because they were not free cash flow positive. So cash did fall a little bit, down to 17.3 million. And do they have any debt? I have a little bit. It's $793,000 of debt. I don't really care about that sort of debt. Okay, what else can we mention? If we have a look at the highlights section, revenue of $30.1 million for the quarter, up 25%. That's pretty nice. 4-year EBITDA expected to be towards the top end of the 7 to 9 million guidance range. So, in fact, this sort of was an upgrade, because if you're expecting a financial metric to be the top end of the guidance range, to me, that's a beat. 4-year positive cash flow of $0.8 million. Wait, there's $0.8 million. Oh, you know what they did? I'm very excited about this, Somnomed. So they mentioned here 4-year positive free cash flow of $0.8 million. What they've done is the way I calculate free cash flow. So take the operating cash flow minus a property, plant, and equipment, which is 2.4 million, and then minus intellectual property, which is 1.6 million. So at 800,000, technically, our free cash flow is just operating cash flow minus capital expenditure. And I have seen many organizations would have said their free cash flow was $2.4 million for the year. So very excited. Was that for the year? Yeah, that was for the year. Very excited about that, Somnomed. And also the company surpassed treating 1 million patients that have operations throughout the world, including Europe, North America, and Australia, Pacific, and Australia. What's APAC? Asia, Pacific, APAC. No, region. Asia Pacific. Is that it? Okay, whatever. Okay, so that's the quarterly for the company. So, yeah, whatever. Now onto the cash receipts history. And in fact, I just have to move sideways from Urbanise because I want it right next to each other. So I have been tracking Somnomed for 12 years. Yes, 12 years. And this is exactly what I'm looking for. Look at this cash receipts history. Look at the nice growth in receipts over time. A little bit of dip during COVID-19 in the June quarter of 2020. So if you take away that dip, it's a really nice increase in receipts. So receipts have grown from $3.7 million to $29.3 million. Exactly what I want to see. But the company hasn't really they've hit the inflection point, but they haven't really shown any scale. And what I mean by that is I had a look at Fiscal AI, and I had a look at the last 10 years of history for this company. So revenue, cost of goods sold, operating expenses, and net income. This company has had a really hard time becoming profitable. In fact, they have not been profitable apart from 2015-16. They've been loss-making ever since. So even though revenue has been increasing, they haven't really hit that inflection point of becoming profitable. And one of the reasons behind that is revenue has grown at 11.9%, but cost of goods sold has grown at 10.9% per year, and operating expenses have grown at 13.1% per year. So you could actually say their expenses, their spending has grown at a greater rate than revenue, which is why, even though we have seen revenue growth, this company has not become profitable. So that is probably a massive red flag for me when it comes to Somnomed. Nice growth, but it's a little bit more than that. Okay, so that's Somnomed. Now let's have a look at the chart for this company. And on occasion, very rarely, this does pop onto my radar, but rarely. And it should be popping on my radar right now. So this chart actually does look good. Daily chart sort of broke out back in, well, 1 year ago. Share price 28 or 30 cents, and the share price has more than doubled since then. So a nice looking chart. But if you have a look at the weekly chart, you can see the share price has been not doing well since 2016 and 17 when they were last profitable. In fact, back then the share price was $2.50. So share price has gone down 67% since then. So I'm not sure if this little rally in the share price is sustainable. Remains to be seen. Now, before 2017, when the share price did reach its high, the chart looked really good. So there you go. There you go. So weekly chart looks good as well. And looks like the market reacted pretty well to their Appendix 4C. Share price up 15.6% on the day. No, they released it on the 29th. Share price responded the following days after release of their Appendix 4C. Okay, so that's Somnomed. And that is the end of this video, looking at 3 companies that release interesting or intriguing Appendix 4Cs for the June quarter. Change Financial Group, CCA, Urbanise, UBN, and Somnomed, SOM. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.